You're watching CNBC-TV18's Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, second day of the week, Tuesday morning. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios here in Mumbai. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel. After the last many days, looks like today there could be a hint of green on the screen. At least that's what the SGX and the Asian markets are suggesting. But you never know, right? Because it has been a sell-on rally kind of market.
Yeah, I mean, I think yesterday for the first time, banks did well, right? And I think that gives hope. It's a large sector, 30-35% of the weight in the index. And if banks pull in one direction, how far can the others kind of go in the other direction? I think that's the broader hope. But let's quickly, sort of start with where we left off overnight in terms of global price action, right? US markets, that's the number one thing. So there was a recovery. I mean, nothing very excitable or, huge in that sense, but the Nasdaq ended 0.6% higher. Volumes were a little lackluster, both on bond market flows and equity market volumes as well, but it was a positive close. The S&P 500 has held an important support. The 50-day moving average has been held. That comes in at about 39.80. By the way, the S&P bounced off the 200-day moving average late last week, and now the 50-day moving average has been held. So, people will look at this with some sense of hope that with these long-term moving averages being held, perhaps there is hope here. All right, now dollar index, which has been the big problem area for emerging markets, it had crossed the 105 level. That has also cooled off a bit. That's at 104.64. So 0.5%. That's a large move on the downside. The 10-year is flat. The US 10-year ended about 3.92. The previous close was about 3.94. So not very much at all, but they've not moved higher, and the dollar is markedly weaker this morning. The Nifty yesterday, coming to the market here, retested the budget day low, broke it, made a new low, and then saw actually a good recovery. I mean, we ended about 70-80 points lower at 17,392, but 17,353, which was the first of Feb low, was broken, and a new low was made at 17,299. And that becomes, in a way, the level to watch out for. In the near term, I mean, you basically want, and by the way, the close was also around the 200 moving average. That is also sort of coinciding around where the market closed. That's at about 17,376 or so. What you need to see, it's been 8 days, mind you, of, sort of negative closes, 8 straight sessions, right? So what you need is a move above yesterday's high and a positive daily close. I think that, and a strong positive daily close, and I think that will reignite hopes that perhaps there is a bit of a trend reversal in the near term, which may happen, right? So we'll watch out for a close above yesterday's high and a meaningfully strong close on the Nifty on a daily basis will reaffirm that. On the way down, yesterday's low, which is below the budget day low of 17,299, falls, and I think that should hold. That hopefully will hold in case more downsides kind of open up. On the way up, the 20-day moving average, I mean, we can look at retracements, etc. as well, but just putting out the moving averages, the 20-day stands at 17,757. It's some distance away, but that's the big first kind of, again, solid level to watch out for. Bank Nifty, as I said, saw a strong outperformance. The index ended 1% higher. For the banks, on the way up, the 20-day moving average stands at 49.93. We closed at 43.07. And with the kind of moves that banks are having, I mean, it's possible we kind of see a test of it if there is positivity in the session today. And yesterday's low of 39.747 becomes important to hold. I mean, banks in the last 2 or 3 days are looking a little stronger as compared to the Nifty, which was not the case in the prior 5 or 6 trading sessions. I think watch for the open, watch for the first hour of trading. It's not a very exuberant, strong handoff from Wall Street. It is positive, so that is good. But I think, in some ways, we're still left to our own devices. We got a very large sell number from FIIs yesterday. So while the handoff is positive, don't go by it blindly, jump in right at the open, watch how the price action pans out. And as I've been saying, let the market tell you that it wants to base out and perhaps wants to tick higher, move higher a little bit. Guys, hi.
Absolutely. And even the green on the screen, right? I mean, it's not a very convincing green. I mean, it's at best, it's a flat move. I guess, as Jim Cramer put it, he said the Fed can't calm a market where nothing is predictable. So I think this, the hawkish Fed speak is one thing, but these macro factors, I guess, are unprecedented in a way, right? So no one knows which way it's going to go. And that's what you're seeing in the market as well. So even if there is a pullback, does it stay convincingly in the green? It doesn't look like that. I mean, the bears have definitely tightened their grip. As Prashant was also pointing out, it's the longest losing streak that we've seen in the last 4 years, what we saw yesterday. The Nifty midday also broke that budget day low of 17,353. So that is another level to watch. Of course, we closed above that. But, now that the budget day low is broken, does it sort of once again resume a downside? Time will tell. Large selling from FIs yet again. Yesterday, FIs sold over 2,000 crores. In the month so far, FIs have sold 6,000 crores. And in just 4 trading sessions, almost 5,500 crores. So this is another worrisome part for the market. Even if there is a pullback post the recovery in the US markets, does it sustain? That's a big question, because it's been a sell-on rally market for a while. A couple of data points that I'm watching out for. Globally, there are a lot of numbers that will come out. So there's, results from Target, Costco, Lowe's, Macy's, etc. And these are all big consumer names. So, what happens with the consumption piece? These earnings will determine that, and then the trajectory of the market. In our own markets tomorrow, you have the auto sales that come out for the month of February as well. I'll watch that closely. The only segment which will do well this time is commercial vehicles, and that's also because there will be pre-buying. There are some real driving emission norms that come through from April. Prices will go up by 2 to 3%, so there could be some pre-buying this time around. So only commercial vehicles, Ashok Leyland, Tata Motors could do well. The rest of the pocket could be under pressure, especially the rural piece, because there is a risk to the monsoons from the El Nino, and that could impact, the entry segment cars, two-wheelers, tractor demand, etc. You've seen this pocket under pressure. So let's see. The bears have been sort of tightening their grip on the market, but the bulls can give them a fight as well today.
Well, that's right, Sonia, and it appears the bulls are up for a fight. Yesterday we defended the 17,300 odd mark, and just going by the global cues, particularly the non-equity close, the dollar index has cooled down, Brent crude has cooled down a little bit, the yields as well came off a little bit. It appears that if you get an intraday dip, today could be the day when you see a bit of a relief rally. Yesterday, there were some signs of short covering on the Nifty Bank itself. And today, the IT index that yesterday was under the weather, that could lend some support in today's trading session, because the Nasdaq was a relative outperformer. And the last 10 days to around 15 days, we have seen there is a correlation between these two indices. The PCR as well has come to the lower end of the range at around 0.72 odd. So if there has to be a bit of a bounce, maybe today is the day. The Nifty Bank, well, yesterday there was clearly a short covering bounce because it ended higher, the open interest was lower, and it took support from the 10% correction from the recent peak. So that 39,750 odd, that's a 10% correction from the Nifty Bank's, peak. Now, in the FIs in the FNO market, well, they added short positions. They added close to 9,000 short positions. The short position goes back to around 83% odd. But what was encouraging is, after a while and after many, many days, they wrote more puts than calls. Close to 90,000 put contracts were written. That's in the ratio of around 3:1. And that's encouraging, telling you that in the near term, maybe that 17,300 odd level could hold out. On the Nifty Bank, though, there was short covering. Though on the Nifty, there appears the short positioning continues because the open interest was higher. And in fact, the Nifty did end lower. But getting into expiry in the next couple of days, the weekly expiry, that appears there's a short straddle that plays out. What is that? The 17,400 call and put. You write both of them. You pocket close to around 160 rupees odd, and then you're playing for a range. On the downside, 150 minus 17,400. On the upside, 17,400 plus 150. And that gives you that range, 17,250 to around 17,550. But what is encouraging for me is the Nifty Bank as well. There was some signs of writing out there. 40,000 put, well, it added close to around 10% in terms of open interest. The premium at around 130 rupees odd. So the Nifty Bank support level is very important. Yesterday's low, February 1st low, and the 200 DMA. So this 39,250 to around 39,750, extremely crucial zone. The SGX Nifty is suggesting a flattish start. And the final mover today will be the Nifty Financial Services Index, because that plays out the weekly expiry today. So HDFC and HDFC Bank, they came to life in the final hour of trade yesterday, and they're going to be most important today because of the Nifty Financial Services Index that does play out. Just take a look at that chart.
All right, interesting stuff, Nigel. Thanks for that. Well, before we start, let me quickly tell you what is lined up in the first half hour of the show today. We will get you updates on the markets across the globe. Gary Schlossberg, the Wells Fargo Investment Institute, will join us to discuss the global setup. Our research team brings you CNBC TV18's list of top 10 stocks for the day. At around 8:30 this morning, we do a fundamental stock check with Deepan Mehta of Elixir Equities.
Okay, lots to talk about. There's a lot happening in the commodity space as well. Coal prices are now at a one-year low. Rubber prices are at a two-month low. So commodities are cooling off, which of course will be positive for equity for a lot of companies. We'll talk about that in greater detail in a bit. But on the equities front, first up, we have a view coming in from Sunil Kaul of Goldman Sachs, who says that they stay overweight, or rather market weight on India, given high valuations, and they expect backloaded returns in the second half, driven by earnings accruals. He says, as Goldman Sachs had noted in their 2023 outlook, the slowdown in discretionary consumption supports their cautious stance on the sector and relative preference for staples over discretionaries. He also likes the themes of capex recovery and the Make in India theme.
Sanjeev Prasad of Kotak Institutional Equities maintains the view of further time correction for Indian markets, although he does not rule out price correction too if domestic inflation was to surprise on the upside. He says it may be best to take a slightly longer-term view of the market and portfolios given the large uncertainty around certain macro variables like inflation, interest rates, and rich valuation of the market and most stocks. He says his positive medium-term view on, he stays with his medium-term positive view on financials on the market.
Okay, good to get you some money market views as well and all that's happening there. Bhaskar Panda of HDFC Bank says the dollar index hovered around 104 pivot even as the GBP gained, the pound gained due to the new Britain-EU trade deal. He says US rates are expected to be hiked as inflation remains a worry. And oil is trading sideways. He also says the dollar-INR pair traded just below the 83 mark throughout yesterday, but the pressure remains today. He adds Asia ex-Japan is showing stability, hence he expects a similar trend in the US-INR, and he expects a range of 82.60 to 82.80 for the day.
Well, on bonds, Bhaskar Panda weighs in, says Indian bond market benchmark yields rose yesterday on the back of expectations of higher global rates and heavy state borrowing calendar this week. He says the 10-year benchmark bond yield is approaching 7.5% mark, but it may not be breached, and he expects it to trade in a range of between 7.4 to 7.5% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Wipro, NHPC, Vesuvius India, Z Entertainment, India Bulls Real Estate, Mastech, Vodafone Idea, and Lakshmi Organic Industries. They are stocks on the back of positive news flow. On the flip side, you have Rain Industries and Cipla that could react to negative news flow.
All right. Let's welcome our first guest of the program in. Gary Schlossberg is Global Strategist at Wells Fargo Investment Institute. Gary, great to have you with us here as always. Appreciate your time. Things have muddled up a little bit, isn't it? It was looking a little, at least the perception was that things were clearing up. The fog of inflation, etc., was clearing up, but not quite, isn't it? Last 4 or 5 data points that we've got all show that inflation still is sticky and around and will be around for some time to come, warranting higher interest rates. How will the markets, global markets really, respond to this? Are we looking at a leg down in equities? Are we looking at further up move in the dollar? Go on, Gary.
Well, we had all along been expecting another rough patch for risk assets generally, equities in particular. We were looking for inflation's improvement to turn bumpier. We had an extraordinary improvement during the latter part of 2022. We expected that to level out ahead of a bona fide recession. That's pretty much what we've had. That backup in interest rates, of course, putting pressure on stock valuations here in the U.S. and overseas. And then on top of that, we did expect to see, and we continue to expect to see, a recession, a moderate one, but a recession nonetheless during the latter part of the year. So the weakening in earnings that we've seen, we do expect to see continuing. A double-barreled headwind for the market, and we do expect it to move lower in coming months as the recession bites.
Okay, you expect the markets to move lower, but you are expecting a moderate recession is what you said. So where do you see the S&P 500 then? In terms of pressure, what are you expecting for the rest of the year? And do you think that there will be underperformance of developed markets versus emerging markets in 2023?
Well, we do expect to see the market move lower. I don't know that it'll necessarily test its lows of last October. We do think that 3,800 3,900 could be a testing period for the market. But we do see it bottoming out above its lows earlier. As we move through a recession, the moderate recession that we expect in the latter part of the year, the market does tend to anticipate, and we do expect the stock market here and overseas to anticipate a recovery and begin to improve very late in 2023. We do expect to see developed markets and emerging markets outperform the U.S., but not until we see the U.S. economy and overseas economies emerging from that slowdown very late this year, early 2024.
Morning, Gary. I hope you're doing well. Gary, you're sounding a little bit cautious rather than being constructive, from the last time we chatted. But how do you approach a market like India? They've been relative underperformers. From the emerging market basket, does India stand out?
Well, India has held up quite well, as best we can tell. Inflation is becoming an issue. There is a risk that interest rates will continue to follow what's happening in the dollar-based market for a time, and that will create something of a headwind. And we do expect to see the Indian market underperforming the U.S. market for a time. But India, in particular among the emerging markets, we think will outperform the U.S. By the turn of the year, by early 2024, as the global economy shows signs of improvement and really benefits from fairly attractive valuations generally, but not until very late this year, early 2024.
All right, Gary, we leave it at that. Thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your thoughts. Well, that's the word coming in on the global markets. There's definitely some pressure that has kicked in, and that's a cautious view coming in. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks with our entire research team lined up. Stay tuned. Well, I promise you it's going to be an action-packed morning of trade because there's so many stocks to talk about. The SGX Nifty may be looking flat, but the news flow is heavy. Our entire research team is joining in to tell us all that's been transpiring in the last 24 hours that you missed. Rima joins in first up to talk about Wipro. Rima, why is Wipro on your radar?
Hi, good morning. So Wipro has announced a business restructuring, a corporate restructuring, where to bring in sharper customer alignment and focus, they will now be restructuring their business into 4 global business lines. One of them is cloud, the other one is enterprise technology, the third one is engineering, and the fourth one is consulting. But bear in mind that since Thierry Delaporte has been at the helm of Wipro over the last 4 years, this is the second restructuring that he's announced. The first one was effective 1st of January 2021, where he had divided the business into 2 global business lines. Now he's made it into 4 global business lines. But whenever you have restructuring, while it may drive sharper client focus and realigns it to the customer needs, there is also some level of exits which take place, higher attrition at the top level. So that is something that we will need to watch out for. And of course, the entire benefit of this restructuring. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, Vivek joins in to tell us about NHPC. Morning, Vivek.
Well, good morning. It's a significant approval and it's going to be a very large plant, NHPC. And what's actually happened is that the company has got the approval for a Dibang multipurpose project. This particular project is based in Arunachal Pradesh. And, the estimated completion period for this particular project is 9 years. So after 9 years, NHPC will begin to start supplying power. And it depends to be seen whether it is done on a, project completion basis. But talking about the project itself, the capacity is of 2,880 megawatt. And the project will be producing almost 11,223 million units of energy in a year where the company says where it has 90% capacity or 90% dependable year. Estimated cost of the project is over 31,800 crore. And when you're talking about this particular project, it's the largest ever hydroelectric project that's going to be constructed in India. Getting all the approvals means it's a slight positive as far as NHPC is concerned.
Okay, thanks a lot for that, Vivek. I'm tracking 2 stocks, Rain Industries as well as Vesuvius. Both of them came out with the set of numbers. Let's start off with Vesuvius India. Well, the numbers look good on a year-on-year basis. Though on a sequential basis, there is some weakness. So revenue, good growth out there, 30% higher. EBITDA doubled on a year-on-year basis. But margins on a sequential basis, well, they shaved off close to 250 to 300 basis points odd, which is a little disappointing. But the hope is that it recovers from here on. The profit number as well looked quite good on the back of a good operational performance. And in addition to that, they've appointed Mr. Rohit Baheti as the CFO. He comes from an investment banking background, so I think the street will like that. So I expect that stock maybe to open up in the green, though it's already had a bit of a run in the last few days. Moving to Rain Industries, those numbers look a little bit disappointing actually. Top line, yes, there was growth of close to around 35%. The EBITDA, though, was up by only around 28%. So on a sequential basis as well as on a year-on-year basis, the margins have contracted a little bit, so expecting a tinge of red out there. Though they reported a net profit in comparison to a loss, so that's because of taxation angle. The stock has already seen a sharp correction from the recent peak, but maybe some more red to kickstart it.
Okay, well, we'll watch out for Rain Industries, but Z Entertainment is another stock. It's been really all over the place. Lots of pressure on that stock as well. Vivek is here to give us the latest. Vivek, over to you.
Well, that's right. You know, so very important circular coming in from NSE yesterday as far as Z Entertainment is concerned. So what actually happened was that earlier, remember, post-May, there was actually exclusion of Z from the F&O segment itself. However, yesterday's circular makes it quite clear that at this point of time, you know, that particular circular stands withdrawn. So Z, even post the next 2 months, derivative contracts will be available to trade as far as the derivative segment is concerned. Also, importantly, you know, the 100% upfront margin requirement also now stands withdrawn. So a positive development as far as Z is concerned. Just for you know, some context, on 23rd of February, NSE had decided to exclude Z, you know, 2 month forward contract onwards from the F&O segment, and also put a 100% upfront margin requirement. So removal of both of these, you know, are quite positive as far as Z is concerned.
Okay, Vivek, thanks so much for giving us those details. So let's hop across to Nimesh. She's joining to tell us about India Bulls Realty. Nimesh, change of guard, it'll be read positively.
Yes, Nigel, it will be read positively. So I had alerted this last Thursday in Deal Street Charter, and now it's official. So the current MD, which is Mehul Johnson, he has resigned and will be replaced by Sachin Shah as the ED for the next 5 years. Additionally, they have announced appointment of 3 independent directors for the next 3 years. Effectively, what this means is there will be a further control of this group with the embassy, and most of the India Bulls team is pretty much out with these resignations and the change of guard. Also, the NCLT hearing for the proposed merger between India Bulls Real Estate and embassy is scheduled for March 1st, which is tomorrow. So that will be an important trigger to watch out for. But the change of guard simply means a more control in favor of embassy.
All right, thanks a lot for that. Well, that's on India Bulls Realty, but Cipla is also on our radar this morning. Ekta is here to tell us why. Ekta, over to you.
Thanks for that. Well, the much-awaited Indore Form 483 is what we've accessed. Just to give you a bit of a background, the plant was inspected just in the earlier weeks of February, and it was issued 8 observations. Now, I've gone through the observations. A couple of them include, for example, procedures to prevent microbiological contamination is not established, review of any unexplained discrepancy, there's a failure there, procedures for handling written or oral complaints are deficiently written or followed, field report is not submitted as required under the SOPs. Now, basically, these are a couple of these observations which have stood out. Now, what this particularly means, according to a lot of the people that I've spoken to, is that it's going to take them time to resolve these observations. There is no real data integrity or severe observations, but the quantum and the type of observations will still take the company a longer time to remediate. So just to give you a background, this is definitely negative for Cipla because the plant which manufactures respiratory products as well as oral products contributes to around 15% of the EBITDA, and the inhaler Advair generic is filed from this particular facility and could now be possibly delayed going forward in terms of an approval as well as a launch in the US markets. But how much of this is factored in, considering that the stock is down 6% month to date and around 11% year to date? Remember, the day the Form 483 the details came out, the stock had corrected severely. So maybe a lot of the bad news is probably already factored in.
Okay, thanks for that. Well, Rima is also with us. She's going to give us some more stocks that are in the news. Rima, over to you.
Thanks so much for that. So let me start with Mastech, which has announced a strategic partnership with an AI company called Netail, which focuses mainly on retail companies. So this partnership will help Mastech provide greater offerings to their e-commerce, omni-channel retail players. So that's a positive. The second one is Vodafone Idea. Now, Vodafone Idea has allotted nearly 1,200 crore of optionally convertible debentures to one of its vendors, American Tower Company, ATC. Vodafone Idea owed dues to ATC. Vodafone Idea has been unable to pay those dues to ATC. So in lieu of that, they were offered optionally convertible debentures. 1,200 crore has been allotted. A balance 400 crore is still left. And finally, Lakshmi Organics is on my radar because there is going to be a change of management. One, the current CEO is going to step down. Instead of him, we've got Rajan Venkatesh, who has been selected as the MD and CEO for a period of 5 years. And also Mr. Ravi Goenka, who is the current chairman, is going to step down from his role as a chairman. He will now be designated as the executive chairman of the company. So there is going to be a bit of a change of guard at Lakshmi Organics. Back to you.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Wipro, NHPC, Vesuvius India, Z Entertainment, India Bulls Real Estate, Mastech, Vodafone Idea and Lakshmi Organics. While stocks with negative news flow, there's Rain Industries and Cipla. But time for some important domestic macro cues. Now, the GDP for the third quarter for October to December will be announced today. A CNBC-TV18 poll sees the Q3 GDP growing by 4.7%. To put all of these numbers into perspective, Lata is here with us. Lata, over to you.
That's right. It's expected to be 4.7%, the October to December growth. That compares with 5.4% in the same period last year, and 6.3% Q2. But the important point is it's better than the 4.4% estimate which the Reserve Bank put out for the October-December quarter. Now, the first question that comes to the mind is, I mean, 4 point something, aren't we at least a 6 to 7% economy? What's this 4.7 all about? Now, actually, 4.7 is strong, stronger than even RBI, as you can point out. It's strong because the base last year, last October to December of 2021 was a very strong quarter. We were coming out of Delta, remember? I mean, we had a long period of practically not being able to do anything. So it's an extremely strong base as well, actually, if you look at Q3 of 2020. At that time also, we were coming out of a lockdown. So 2 strong quarters year ago. And on that base, 4.7 should be considered good. If we do 4.7, actually, the real GDP, adjusted for inflation, would be about 40 lakh crore. And that will mean an almost 5% growth from Q2, which is huge sequential momentum. I mean, imagine if you can run at a sequential momentum like that, you're talking about a 16-17% annualized growth. So it's a good number, 4.7. Big contributor will be services. There's a big category which we call trade, hotels, transport, communication and broadcasting. That's expected to grow 11 or maybe even 12%. And that's because, again, it's a low base. These are services sectors which suffered terribly the quarter before, that is the year ago in 21 and 20. So it's actually still recovering. Per se, if you compare it from 4 years ago level, this is still weak. But year on year, it's giving us a big bump up to the GDP. The other positives will be the services sectors, construction, and the utilities, power, gas, electricity, etc. Those will give in some 7 to 8% contribution. What won't work will be manufacturing, likely to be -2 or 2.2%. And that's because there's higher commodity prices, raw material prices impact, weak consumption, to some extent even internally, rural, even urban discretionary started declining towards December. Of course, export consumption was poor, so manufacturing won't help. Now, finally, this is the googly. They're going to revise the base, and they're going to revise 3 years of bases. They're going to revise 22, 21 and 20. You will get the first revised estimates of FY22, second revised estimates of FY21, and a third and final revision of the FY20 estimates. So if the base changes so completely, what are all our forecasts? I mean, they may go for a complete toss. It will take us a little while to judge whether the number we get is good or bad.
All right, Lathan, we'll sort of await your comments when the numbers do hit us. Thanks very much for that quick snapshot preview. Well, let's focus on what's the action in the commodities market. Manisha is joining in with exactly that. Manisha, hi, good morning. What are you picking up?
Thank you for that, Prashant. Well, I'm looking at some profit taking across board here. So we did see the crude oil prices decline 1% overnight. And there's one, problem bothering all. It is about the recession-driven demand concerns there. It also is about the strength in US dollar index and fears that you could be looking at more aggressive rate hikes coming in from US Fed. Is the reason there is a decline in the steel and the metal prices also. So you have iron ore prices now off its 8-month highs. Nickel is now trading at a 3-month lows. You have platinum prices at a 4-month lows. Steel, which had been holding quite firm for the month of Jan and Feb, in the last 1 week, that one also has started to come off now. And you have the copper prices now trading below $4 a pound. Not just that, many other, tertiary commodities like rubber, for example, also is trading near a 2-month lows right now. There also are demand concerns from China. So we don't seem to be ending Feb in a very strong note when it comes to commodities, and that perhaps could spill over in the beginning of March as well.
Okay, Manisha, thanks a lot for that. So, a huge fall across commodities, coal prices, rubber prices, all at multi-month lows. Let's do one thing. Let's take a quick break. On the other side of the break, Dipan Mehta of Elixir Equities will join in for some fundamental stock analysis. We'll also have the management of Blue Star joining in. B. Thiagarajan will be coming through to talk about, remember the IMD had come out with a forecast of a heat wave in the month of March. That would be beneficial for companies like Blue Star. Stay tuned for that.
What makes us who we are, if not the way we experience the world? Because while first class is something you can buy, world class is everything we do. Welcome to world class. Welcome to Singapore Airlines.
Get the grip of good health even after 50. Presenting now, Star Health Premier Insurance Policy. Always at your doorstep.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। कुशलता की कार्यशाला में तराशा जाने वाला हीरा हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
With Apollo Tires, have a wonderful day.
When it all began, I had only a few runs on the scoreboard and fewer spectators in the stands. And then what? I worked harder, and that's how from Saurav, I became. When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan. Like Bandhan Bank, आपका भला, सबकी भलाई।
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
बर्जर लॉन्ग लाइफ फ्लेक्सो, इसका फ्लेक्सिबल फिल्म न सिर्फ क्रैक ढके बल्कि फंगस से भी प्रोटेक्शन दे। घर शानदार, इज्जत बरकरार। बर्जर लॉन्ग लाइफ फ्लेक्सो।
Show me the sunset. You make me happy. We wanna go there. It's beautiful.
Magnite. Be celebrated with the big, bold, beautiful Nissan Magnite.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Welcome back. I hope you're having a good morning. Well, the SGX Nifty is suggesting a more or less flattish start, but there are plenty of stocks to discuss, and we brought you our top 10 segment. But let's discuss all of those with Dipan Mehta, Director at Elixir Equities, who joins us this morning. Morning, Dipan. Thanks so much for joining in. Well, the first stock that we discussed was Wipro. They're going to be, restructuring their business. What's your take on the IT pack? Yesterday, it got a hard knock. Now, the Nasdaq did rebound overnight. So maybe we'll see some green on IT names today. But what's your preference on the IT pack?
Good morning, Nigel, and thank you for having me on your show.
I think, see, Wipro and many of the other companies, they are truly being impacted by the slowdown in IT spending globally. And although those were not easily visible in the December quarter, but the way the stock prices moved and the continuous adverse news flow on the key geographies they operate in lead us to believe that maybe next few quarters could be soft. And the way to play IT has to be through selective stock selection. And by that, I mean focus on companies which have continued to maintain growth rate because they are in a specific vertical or they have a special offering or they are in a strong position with certain clients. And the companies which come to mind are companies like Persistent Systems. I think if you look at the numbers for the December quarter, you can't believe that there is any slowdown in the IT sector. Same holds true for Coforge and even Tata Elxsi, I think, reported excellent set of numbers. So within the IT pack, our focus is on mid-cap IT companies which are in a very specific vertical where growth rates have not been impacted, where IT spending continues to remain strong. There could be in technology, in automobiles, tourism. I think there are those few sectors where IT spending remains pretty much robust, and the companies which service those verticals are the ones we need to focus on.
Deepan, good morning. What are you picking up on Z? Because yesterday saw a sharp cut. It's back in the F&O segment, though. I mean, I think the bigger thing is this settlement with lenders and that merger with Sony. Is it giving a one-off kind of opportunity, or is it a bit of a no-go at this stage? What's your sense?
Good morning, Prashant. They're very difficult to call. And, actually, I put Z on the back burner. I just want to wait for this actual merger and see how the consolidated financials emerge and what are the synergies and how they're able to extract those synergies and take the business forward. Per se, media stocks have gone nowhere. And overall ad spends or the kind of competition they're getting and disruption from the OTT players, that's not going to go away. And specifically, Z's OTT offering is still a long way to go in terms of turning solidly profitable. So it's a very confusing picture, and it's better to just wait and watch. Optically, the stock price certainly appears to be cheap, no doubt about that. But the prospects and the mergers leave a lot of uncertainties on the table.
Okay, well, I have many more questions for you. Also, what's happening with commodity prices, right? Rubber prices are on the lower side, so is coal prices. So we'll come to that in a bit, Dipan. But in the meantime, we'll talk a little bit about these consumption companies. So the IMD has issued warnings of a first heat wave in the year, in the month of March. It says that parts of the western region could reach 37 degrees Celsius. Now, this news of early summer is positive for air conditioner and cooler makers. Blue Star has surged over 16% in the last 1 month alone. B. Thiagarajan, the MD at Blue Star, joins us now to discuss the AC demand trends ahead of the summer season. Mr. Thiagarajan, good morning. I guess the same thing plays out year after year, only this time it's coming a bit earlier, the heat wave. But tell us, how has the demand been so far? And at the onset of the summer season, what kind of growth are you expecting?
Good morning, Sonia. It's wonderful to talk to you. All throughout the year, whether it's Q1, Q2, Q3, as you're aware, we have done exceptionally well. So the news is that the summer is getting advanced. So therefore, the dealers are beginning to stock. We would have expected the pickup in the month of March, but in February itself, we are seeing traction across the country.
So when you say traction, can you help us with some numbers? I think on an average, you've done about a 20% growth on your top line, at least in Q3 of last year, of FY23. What would the average be, say, by the end of the year? What are you forecasting in terms of growth for the full year, FY24?
Yeah, if you look at it year to date, growth of Blue Star revenue is around 40%. EBIT growth is around 66%. I think the same trend we will maintain and close the year. Basically because all the segments are doing well, whether it is room air conditioners or commercial refrigeration products or electromechanical projects, where we are sitting with close to around 5,000 crores of record order book. The summer alone, if you look at it, one would have thought that it is anywhere between 20 to 25% growth. I think it will be 25 to 30% growth. See, it is not that summer will last from February till June. Early summer means it is going to also end early. That's our assessment. And we would be planning for around 30% growth during the summer season compared with last year.
Okay, all right. Hi, good morning, Mr. Tyagarajan. You said there's traction that you're seeing on ground, and definitely, the heat, it's scorching heat actually for a month of February. But what do you end Q4 with? I mean, last year you did around 2,200 crores odd. I think you were guiding to end this year closer to around that 8,000 crore odd mark, which would imply that you see at least a 20% growth in Q4 in comparison to last year's Q4. Doable?
I would think so. That's the plan. The target is to touch $1 billion revenue, and in the room air conditioners for the first time we would cross 8 lakh numbers. Next year we are planning to cross around 1 million numbers. That's the plan.
Oh,
okay.
That is FY24, right?
That's
okay, 10 lakh room ACs in FY24. That's the target.
That's right.
Mr. Tyagarajan, some feedback that companies were reluctant to take price increases in the third quarter and fourth across the board in Q3 and maybe in Q4 as well. And many are expecting price increases in March. Is that something that Blue Star will also go ahead and do? And in what range, if so?
Prashant, we have rejigged the complete product portfolio. For the first time, we were premium player. We introduced affordable premium as we are aiming for a 15% market share by FY25. We got into the affordable range as well. So affordable premium. We are playing across all the segments. So the products introduced last month includes quite a few categories in which price corrections have taken place. See, the pricing at the end of the day is what is the demand, what is my market share goal. The good news is, in Q2, we improved our margins. In segment 2 alone, the margin from 6.4 went up to 7.4%. Overall company margin also improved. So I do not see a price increase till at least April first week. We will take a call how it is. As of now, the commodity prices are somewhat stable and the exchange rate is not to our liking. But we are working multiple fronts. One is building scale, get the operating leverage, get maximum number of SKUs from Sri City factory of Blue Star Climatech Limited, which gives us logistics savings. And the third one is with rejigging the product portfolio itself.
Okay, so I have a couple of questions here. You said that you continue to stick to your 15% market share guidance by FY25. There won't be any price increase, but you're building scale and you're looking to get operational leverage. So what would this mean for your margins? You're about, in that 5-6% band, low single digits. Is there scope to increase margins further as the operating leverage kicks in?
Yes. So if you look at it, the company's margin improved in Q2 from 5.4 to 5.9. The segment 2 alone improved from 6.4 to 7.4. I think we will work on multiple fronts. As I told you, Sri City gives us some advantage. We have to build the scale, and the product portfolio within the company itself is changing. Because you have the room air conditioners, commercial refrigeration products, as well as projects, everything growing together. And some investments that we are making, like for example, research and development, promoter Mr. Ashok Advani provided a grant of rupees 100 crore. That's icing on the cake as well. So we are confident of improving the margins.
All right, Mr. Tyagarajan, just to clear the numbers before you go, for FY24, you're working with a 25% growth on that base of 8,000 crores, right?
On the cooling product side, the other segments also should have significant growth next year.
Okay, and on a consolidated basis, margins will move to high single digits. That'll be 8.5% for FY24, given the operating leverage that you're talking about?
That's the aim. Nigel, the thing is, last year we started like that. The war derailed the whole plan. But all these are part of the game. We are moving in that direction. Everything has fallen into place this time.
All right, Mr. Tyagarajan, briefly, maybe a little bit of a off-tangent question, but over the last 2 years, right, we've seen a step-up increase in AC prices, maybe because of the star ratings, new norms, right? Prices have moved up substantially, 3-star, 5-star, inverter ACs, etc. especially. What does that do? Does that do anything at all to the total addressable market itself? Because, I mean, the incremental new customers will come from the lower end, right? And where there it's widely acknowledged that there is a bit of a slowdown. So prices have moved up, and income growth at the lower end has not been as strong as it has been on the upper end. So I just wanted to get a sense. Does it impact the overall TAM in your assessment? Go on.
Logical question, Prasad, but on the ground it is completely different. The reason being, air conditioners for many years people thought that it's not the initial investment, it is the power consumption which is going to be a burden on the consumers. Actually, the customers are very happy. So if you take an air conditioner bought in 2000, if you are buying an air conditioner, it consumes only 20% of the power that it is supposed to be consuming. So 80% reduction has happened due to energy labeling program itself. So that's a positive side. Second is the inflation versus what is the price increase. There is a huge gap. We have not made up for the pre-pandemic level margins at all. In your own channel, I have said that it should be 9.5 to 10% margin. We are now saying 8 to 8.5. So we have not fully realized that. So the penetration levels are dramatically changing. Indian market for the first time will cross that mark of 10 million units next year. And from now on, I think 10 to 15 will take only just 2-3 years.
Sure. You've formed some new subsidiaries in US and Europe as well. What are the opportunities that you've already that you see over there, and anything that you've already received?
Yeah, this is arising out of the China Plus One strategy, the global supply chain managers wanting to de-risk sourcing strategy of theirs. So therefore, we saw an opportunity because we do have the inverter technology. We do have commercial air conditioning leadership here. So Blue Star, the question is that whether growth beyond in the Indian market, one can get into white goods. That's not our plan at all. We would rather go across the world with the air conditioning, refrigeration, and that's why we have, apart from Middle East and North Africa, has opened an office in Europe as well as US. We are in the process of developing the products for that market. In fact, Mr. Ashok Advani's grant is related to developing products for overseas markets.
Okay, we'll leave it at that, Mr. Tyagarajan. Congratulations on a good set of numbers, as well as, the stock has done very well. It's up almost, 30% in the last 6 months, done well for investors, and all the best for the summer season. Someone's going to benefit from the summer season, and Blue Star is one of the stocks. They say that they are building scale, getting operational leverage, and there's scope to increase margins further in FY24 as well. Let's do one thing. Let's take a quick commercial break on that note. Lots more coming up on the other side. Do stay tuned in.
All right, welcome back. Just 10 minutes to go for the pre-open session. Let's just have the SGX once again up on the screen. Absolutely flat, 10 or 11 points. So don't expect fireworks or we're not in a market we were in even a few months ago. So this is a slow and steady, a grinding kind of price action. 17,500 at start is what the SGX is indicative of. Mitesh is with us, and so is Kush Bora of kushbora.com. Gentlemen, good morning. Great to have both of you with us here on the program. Mitesh, let's start with you. How are you looking at things? From overnight, there is a slight bit of relief, and yesterday we saw a bounce on the Nifty. Bank Nifty ended 1% higher. Should we expect some pullback here?
Morning, Prashant. I think you're mentioning Bank Nifty is very important. I think let's start with the Nifty first. Nifty has had about 8 red candles consecutively, and yesterday we hit the 200 average, traded below that, and then bounced back to close above it. And this Bank Nifty index was a major contributor to this bounce back. So I think that's where I'll keep my focus upon. The Bank Nifty has a gap around 40,600 mark, and the closing was around 40,400 or just below it. I think if the Bank Nifty can start getting past 40,600, it could possibly go up to 41,200 or even higher levels, and therefore that could pull the Nifty as well. On the Nifty, of course, we are mildly positive. If we've kind of exited our short positions and are looking for a bounce back to about 17,500 odd levels. But if the Bank Nifty, of course, as my belief is that will add to the strength on the upside, then the Nifty pullback would extend to about 17,650, 700 levels as well. So right now, I think I would now look at yesterday's low as an important stop loss, and any intraday declines for me would be more of a buying opportunity.
Oh, okay, that's interesting. So any further dip is a buying opportunity. Kush Bora of kushbora.com joins in. Kush, would you agree with that? Because so far this year, sell-on rally trade has worked. You think things are going to turn now?
Hi, Sonia. First off, thank you for having me on the show. Well, not entirely. Maybe a bit of a pause, maybe a bit of a short covering rally after the sharp slide that we've seen on the downside. But I think here the resistances are still stronger than the support zones. Just to give you a quick data point, the 17,600 call base is extremely bigger compared to the 17,400 put base. So that itself is indicating the kind of resistance that market would face on the way up. Now, as I said, on the way down, we've hit a very crucial 200-day moving average and bounce from there. This is more of weak hands covering the short positions. We could expect a bit of a short covering rally, but I would still favor the sell on rise kind of a scenario. Bank Nifty started falling much before the Nifty did, and hence we're seeing a bit of a short covering rally on that one before the Nifty. But overall, this does seem like a sell on rise market, even after the kind of slide that we've seen so far.
Okay, all right. What about individual stocks? What are you tracking?
Hi, Nigel. A couple of them, this is perhaps a good time to, in fact, have a couple of good stocks in your portfolio, the ones that, you'd always wanted and, you couldn't because the prices were too high. Couple of names, in that category, Indian hotels. This looks like a buy. The stock has shown, relative strength. So for me, if you're buying this as a trading bet, then 325 is the target, 308 is my stop loss. Cera Sanitaryware, this is one stock that, we've discussed time and again, on the channel. So this remains to, be in an uptrend. Here, for a trading range, the target is 6,700. A stop loss would be 6,200.
And how about you, Mitesh?
So I have mix of buys and sells, 3 calls on the buying side. Power Grid, I think, was a recommendation earlier as well. Looks like getting into some kind of an uptrend. Keep a stop at 216 here. Look for targets of 226 to begin with. HAL, after a correction and decline, seems to be reversing on the intraday and the 2-hourly chart. So that's a buy. The stop loss here is about 25.30 and targets of approximately 26.50 on the upside. ICICI Bank, and we were just discussing the Bank Nifty. So ICICI Bank is the pick from the banking index. 849 is the stop loss. The first target is a small one at 870, and then we can even look at 885. And one sell called UPL on a mild bounce back. Sell with a stop at 723 for targets of 690.
Thanks a lot, gentlemen. We'll take a quick break. We'll come back with the pre-opening rates. We'll also discuss the big stock of yesterday, which was Bajaj Auto. It was down 5% after reports indicated that the company is going to take an up to 25% production cut. And more on the auto ancillary names as well. Jay Kale of Elara Capital will be joining in to talk about some demand trends. Stay tuned.
Welcome back. Well, the SGX Nifty is suggesting a flattish start, but Asian markets are doing well. The Shanghai market's high, the Hang Seng market as well as high. So pretty good going. Asian markets in a good place. How do you approach trade though? And good time to get in some derivative strategies. Manoj Muralidharan, the VP at derivatives at Religare Broking, joins us on the show. Hi, Manoj. Morning. Run us through your strategies for the day.
Good morning, Nigel. Nigel, we've just started this March contract, and obviously the last season we had the union budget, so affairs were cautious and they had a short positioning of close to 80 to 83%. We are seeing the more or less the same percentage now. They are almost at 83%. But yesterday, the major difference that I would see in the data is, if you see the Bank Nifty positioning has happened not only in the March future, we are seeing more into the April and May as well. So that is usually, we believe that there is a possibility, a ratio analysis, if you simply divide Bank Nifty by Nifty, says that we are almost at 2.31. Now this has a support at 2.26 and the upside potential can be 2.38. So Bank Nifty can outperform in the short term. The only resistance as of now would be, let's say, 40,800. So at least for this short term, or maybe a 2nd March expiry, you can buy Bank Nifty. The stop loss should be 40,150, and again, as I said, 40,850. But for the Nifty, we would wait for a close above 17,600. I guess only above that we might see a good 250 odd points rally. So even if you need to buy an intraday positioning, 17,420 to 440 on the future is a good level to go long. 17,380 is the stop loss, and again the target of 17,600 on Nifty futures seems prudent at this point.
Okay, all right.
Picks.
Your picks, your stock trades.
Prashant, good morning. Prashant, I guess ICICI has seen good build-up, and as I say, the stock has a good weighted average price base at almost 842. We saw that being respected, and the stock has seen good buying. So we're expecting 866 as a target. So buying it closer to 848 to 850 seems prudent. Stop loss should be 840. Tata Motors, even at 420, would become a buy. We believe 412 is a good base building in the last 3 months, and it has a potential to go almost to 440. So with the stop loss of 412, Tata Motors also becomes a buy for target of 440 in the short term.
All right. Thanks very much, Manoj. Appreciate you joining in, and good getting those stock trades